Yo, what's up, guys? Yo, what's up, guys? Ah, all right. Let's see. I need some people coming in. Hmm. First target hit. I don't having people coming through. Crazy, crazy. Hey, what's up? What's up? What's up? How's it? How are you? All right, let's get into it. Let's get into it. Let's get into it. Let's get into it, guys. Um, so I'm gonna be talking about a few things that I think you should look for in terms whenever you come to liquidity. Most people end up getting caught for one of two reasons, right? Um, they always wanna look for probably like the latest liquidity, right? Let's say we have ranging price like this, right? Price is ranging like this. So you can clearly see that liquidity is building up above this size, right? We can see that, as you can see, price is sort of, respecting this size, right? This size over here, right? Price sort of respecting, as it came, it respected this size, it came, it respected this size, right? So we can clearly state and see that, price respect is with the respect in this size, we're seeing liquidity being build up to the upside, right? So one of the things that we most, I think I would say whenever it comes to liquidity, you wanna look for areas where people get trapped, right? For instance, you can't be looking to aim for liquidity downside, meanwhile price is going to, to the downside. You wanna be looking for liquidity to the upside. You get what I'm saying? Like for instance, right? We see price coming back to this, respecting this high, probably to the downside. Same thing, price respecting this high, probably to the downside, right? This clearly shows there's some sort of a reaction that people got from this level. Same thing also appears here. People got some sort of a reaction from this level as price continue to sell to the downside. You get what I'm saying? So how do we then take advantage of that? You know what I'm saying? So you would realize that price at some point will take out the low that was made prior to price going to the upside. You get what I'm saying? So you have to look to the left, right? You have to look to the left a little bit more, where you see that price would have taken out that, you might find out that there was some sort of a low that price ended up making, to this level over here, and then probably before it started going to the upside, right? And that low ended up being the low that ended up being price taking out this low, and then from there that liquidity sweep ended up happening, and then you ended up having price go to the upside, eventually taking out this high over here. You know what I'm saying? Right? So what you want to see is that you want to see people getting trapped, right? You want to see orders being stacked. So you want to see people getting in on the move, right? Being sellers being induced to the downside, and then eventually from there, price would definitely build up something from here, from this area over here. Chose the wrong thing. Yeah. So you want to see price eventually taking out this low where we had, the first liquidity sweep. Price probably building from there, start to take out some of these highs. You get what I'm saying? So even by price doing so, it's also building some sort of liquidity also on the downside. You get what I'm saying? So these are some of the things that can help you, but eventually because of this high ended up been taken out after this liquidity sweep to the downside, they expect that this high also will get taken. Because why? This high, by respecting this high, it then shows that there was some sort of orders which were also stacked from this level over here. You get what I'm saying? From internal, highs over here. So as soon as price comes to the downside, there's so the liquidity is being built up. You get what I'm saying? So pretty much that's some of the things that you can eventually look to trade on and then take advantage of the market, right? I'm gonna be making some sort of examples whether you guys wanna see it from the time frame and then obviously from a lower time frame. I'll start off probably on the long or the 4 hour. Um right. So with that being said, you can clearly see that we had this liquidity block over here where on the 4 hour we saw price run below, right? We saw price run below this level over here, even saw price from these levels, price sort of run over these levels over here. You get what I'm saying? From the 4 hour, right? And then as price continue to go to the upside, you can clearly see that we had this level also which was run through by price from the 4 hour, right? We had this level which was run through from the 4 hour and price eventually went to the upside, eventually taking out some of these highs. You get what I'm saying? So as price was doing all of those movements, right? So we saw price take out some of these highs, this one specifically, to be specific at this moment in time. We saw price take out those highs, and obviously the long-term high was gonna be this one where price came from, right? And as you can see, price eventually ended up going there. But I just want to take you through how price eventually got there, right? So as you can see, we had these highs, but these highs eventually were made after, this high, this low over here. which ended up making this size eventually also breaking above these over here, right? We saw that liquidity sweep to the downside. We don't, so most of the time, you don't want to always jump in. You want to have price eventually come back for a second time and then eventually, take out that liquidity. So we know that below this low over here, there's no longer liquidity, right? We need to see liquidity build up so price can come to the downside, right? So with that being said, we see a market start shift probably from downward. I would definitely take it from here, but let's take it from this side over here, right? We see a market start shift coming from this level over here, and then when you pull down in terms of price, whenever you got, when you pull up your, whether you're gonna use your Fibonacci or whatever the case may be, right? In this case, I used just the block and then the middle 50% of that, and then you would have, if you would have bought from these levels to the upside and eventually aiming for that high, there you could have gotten a clear entry going to the upside, right? Stop loss gonna just be below and then obviously aiming to the upside. You're just gonna be here almost the 1:2, right? That was just probably off the 4 hour, right? And then let's see, we can clearly see that there was some sort of, a fair value gap on the 4 hour from these levels over here, right? There was some sort of a fair value gap from these levels over here also, which price came to mitigate and then went to the upside. You get what I'm saying? And then, I think if you use the fib, probably, yeah, we also came to the OTE, right? We came to the OTE, the optimal trading entry area on the 70, right? And then also still could have been also one of those entries where you have a stacked OTE and also a fair value gap. You get what I'm saying? So you can see now price is building liquidity now also, right? So we have liquidity being built from these lows over here and also price obviously looking, your first TP can be here and your second TP, your final TP can be at those sides over here. You get what I'm saying? So whenever you looking to take the, what is this price to the opposite direction in terms of trading liquidity, you want to be in a position where you understand that any reactions that will make price come to the downside will be a false rejection, will be a false reaction. You get what I'm saying? So as you can see, also price whenever it was going to the upside, it made these levels where prices, has been reacting. Like for instance, we had liquidity also situated at this level over here, right? We had liquidity situated at this level over here. And when you look at how price got to that level, you can clearly see that price wicked off this level and then started to buy. We got a reaction off of this level over here, right? We saw a reaction off of this level over here. And then eventually what price did is that it, sold to the downside regardless of that happening, right? So these are some of the things that you want to see happening, right? Price building up these liquidities and whatever the case may be, and following to the downside as price continues to, go to the downside and sweep out those lows and then eventually go to the upside. And the same thing that happens on a higher time frame would eventually end up happening on a smaller time frame. You get what I'm saying? So as you can see, we saw price end up sweeping these lows and then eventually going to the upside. And the final TP was this area, and we saw a 1:4 risk to reward. And this only on the 5 minute. As you can see, all of this was happening off of the 5 minute. You get what I'm saying? Right. So we eventually take out these highs. So we now have a liquidity which was built up from the orders that were stacked at this bottom, right? So we have this area. Remember, we had this area where we knew that stop losses were sitting here, and with the fact that before, because this was the second liquidity sweep from this area over here, we saw that price had not went below, so it created orders at this level. Stop orders were below this level over here. Don't forget this level. I'm gonna mark it, right? So don't forget this level over here, right? So we saw price eventually end up breaking above this size. As we saw price break above this size and then price continues to go to the upside. As we saw price continue to go to the upside, even so, we saw price weak out also this liquidity over here, market, liquidity sweep. and then we had this higher price reacted to that, and then obviously with that price reaction to that, and then price weeks out that also for a second time, the same way price did this, it will not do it for the second time, right? So the liquidity was swept from these, obviously, these highs over here, right? And then from there, price started to do what? We saw a market started shift also happening. Same thing that ended up happening in this area. We saw a market started shift happening from those highs, right? From those lows actually, right? After the liquidity was swept for the second time, right? So we saw this market started shift actually happening from these areas over here, right? The market shift end up happening from these areas over here. And then from these areas, as you can pull, whether you're gonna use, the 50%, the equilibrium from that prawn point and to that where price started to react from. Because as you can see, price started to move sideways, right? Price started to react to respect the highs, which means liquidity is being built up above this area. So you want to see a reaction where price take out these areas above here, right? You want to see a price, take out these highs above here. And what price taking out these highs above here, as you can see, when you pull your fib to the downside from the second, sweep to these lows above here, look what do we have over here. We also have a fair value gap. We also have a OTE, right? We have a optimal trading area from that area, and then you can be able to have your sell order from there. What is going to be a sell limit or a market execution stop loss just above the highs, and then obviously looking to take price away to the downside, right? Coming back to this level over here, you want to understand where price kind of build up, right? I wouldn't be looking at to target this high, but I mean this low. I would be looking to target this one instead, right? Reason being, from price where price came from, to the upside. This is where the executions are. This is where the stop loss are. Obviously, in overall, this will be the overall target. But just from what you observe in terms of how everything is moving, you can target this and look at the risk to reward. Your risk to reward is much higher, and this is a 1:9, right? Overall, and as you can see from those levels, as we pull as we pull our position, our long position, let's go to 15 just to give you, you know, an eye on how things are looking. Can you see that? Right? So same thing as this is a reaction where buyers will be trapped. You can any reaction that we'll get from where price ended up pushing to the upside from these levels is where liquidity is also sitting because look how these lows have been respecting the previous lows. We've been having these lows, from this low respected the previous low, this low also respected the previous low, this low also respected the previous low. You get what I'm saying? Also, this low over here ended up respecting this previous low. So obviously, in terms of targets, whether you're gonna be looking to target, the first target would have been here. This would be where you expect buyers to come into the market, which they also will be taken out. So there will be liquidity. There is liquidity over here. Sweep to the downside, push to the upside. Obviously, buyers are gonna be pushing to the upside. Obviously, after this reaction over here, they will be looking to take price to the upside. When you drop down to the likes of 5 minutes and 1 minute, you'd realize that in that area the buyers got in. You get what I'm saying? So start to see price react from this area, and let's see the 1 minute. Um, you can clearly see, as price pushes to the upside. And even so, I think when price comes back to this area, you can see sort of some slow little reaction whenever go to this area over here. The very same area, you can clearly see the price, the buyers were kind of caught in that area over here. If we pull this over here, let me just change the color. Let's make it blue, right? You can clearly see that there was a reaction of this, but this was a false reaction. You get what I'm saying? But overall, the target is below this area. And also, as price is going to the downside, what is price doing? Because we have the first entry at this area over here. We have the first entry, this area over here, obviously looking to aim for the downside, the orders below this area, right? So stop loss just above the highs over here, which brings our total to almost a 1:9. Obviously looking to go to the downside. Look, price, we have orders sitting at this area, right? We have stop loss above this area. So you can expect after this low gets taken out, that price will be looking to target this high over here. You get what I'm saying? Price will be good to take this high over here. And as much as this high also was able to respect the previous high, which shows that there is orders which are sitting at this area, price might eventually, after sweeping these lows, might actually look to go even higher to either this area, which shows that there is liquidity sitting above these areas over here, right? So you want to see those small reactions where you see buyers, coming into the market if you've swept in the previous liquidity to the downside, but you don't want to be going to the downside immediately. You want to be waiting for the upside liquidity to be taken, the buy side liquidity to be taken, and then obviously from there you get that market start shift. You want to see liquidity being built, that liquidity being swept, and then that will also create you an entry. You will see either a fair value gap, you will see either an optimal trading entry, yo, bro, you see either a trade optimal trading entry, and then obviously looking to target those liquidity to the downside. And so far, as you can see with this trade, we almost, I think, probably 1:6 in, and then obviously the overall target is 1:9, almost 1:10. So this is just probably from the previous day session as price continues to go to the downside, right? So also, even if you were to break it down in sessions, right? Even if you were to break it down in session, it will still be the same thing, right? So just off the rip, you can probably see that this was the previous day in your session, right? So when you come to today's New York session, you can clearly see that price ended up taking the liquidity to the downside of the previous session, right, of the previous day, right. Previous day session, we saw this liquidity being swept, right. We saw this liquidity being swept, right. Obviously we saw this area over here where kind of bias were induced. We saw price, obviously do this, you know took that liquidity to the upside and then induced buyers to get in, I mean, sellers to get in, and then to the downside, right? So sellers got in at this level. So you can expect this level over here to be taken out. Same thing happened here, but then, price ended up selling until this area, right? So now, this was the last one where price ended up taking out that liquidity. You get what I'm saying? So as you can see, from yesterday's New York session to today's London London Open, we ended up seeing price over to do the very same thing. We had the high price ended up creating this, almost relative, equal relative highs. Sorry about that. Obviously, price ended up taking out this high over here also. As you can see, wicked it out. Price wicked it out, right? Price also wicked it out that highest liquidity, right? And then obviously from those levels over here, you can clearly see that this level obviously ended up having that market structure shift, and then from there, price made a market structure shift. And even if you were to pull your fib or whatever you would have preferred, I think if you're gonna pull your Fibonacci at this level, you could have got in here stop just above those highs over here, and this will give you a crazy RR, bro. Like, this is madness, right? Um, Stop above over there, and then as you can see, already in, and then obviously the next liquidity target would be at this low over here, right? And obviously, any reaction that will come, that will be just to induce the buyers to come into the market, and then obviously get swept out immediately, right? So you can see from there up until this area over here, you can clearly see that was a 1:2 20, which is crazy business, bro. But pretty much that's what ended up just from the 5 minute and using yesterday's session, how price ended up, taking out this some of this liquidity because now you want to be in areas where price has shown that it can buy or sell, right? So as you can see from this high where price ended up wicking it out, right? We wicked out. So that would mean that there's no longer liquidity at this area because the liquidity was already swept from this area, right? There's no longer liquidity at this area from yesterday's session. It was swept out, right? So what does price do? Price comes, takes out some of this liquidity to the downside. Obviously now they were inducing sellers to the market. They induced sellers, they included sellers to the market by wicking out this high, this internal high over here. They wicked it out, and then from their price so to the downside, eventually taking out that overall sell to the downside, right? And this is just only off of the 5 minute, right? So we ended up taking out this liquidity, and from this liquidity being taken out, price started to buy up to the upside. And as you can see, all of this move to the upside. What does price do? Price continue to respect this low. We saw price respect these lows, right? Price continue to respect the low until we wicked off that liquidity to the upside. The previous one, because this one doesn't, because this previous one doesn't have liquidity because it already swept liquidity. So there's no liquidity above here, right? There's no liquidity above here on a small time frame. But there is liquidity about this area because that's where sellers were induced. Because of, if you look here, there was an order block from this area over here. We had an order block over here. Or you can call this a liquidity block because of what ended up happening here, right? The liquidity was swept. We have a liquidity block, right? So with that being said, you can clearly see price comes back and then weeks out this liquidity, and then eventually this liquidity where you have a double liquidity sweep, like I always say from the previous video. Price wicks out that liquidity, and then obviously once you get a market structure shift, you want to be there on the market. You want to be there on the market, like market structure shift from this level, price gives you a low, right? And then price goes back up. Now you have, you know, an area to get into the market with. And there you see just around London session today, sellers stepped into the market. And as you can see, your target here was 1 is to 20. So if you are risking $100, you would have made 2 grand off of this move. And like I said, any reaction from some of these levels over here, so as you can see, would be a forced reaction. Internal, this looked internal, you see, internal reaction, false break, you see, weak off, go back up, induce buyers from here, they jump into the market. And when you go down to the likes of 1 minute, man, things starts to get crazy when you start looking at this thing, you know, false reaction, there you have it. Buyers start to jump in, they look for any reason to jump into the market. They get wicked off already. You got in at the optimal trading entry, trading to the downside. You get what I'm saying? Do you guys probably have like any questions in regards to this thing? Like this thing is crazy. No matter the time frame that you are on, you can clearly see it. You would clearly see it. And you can get crazy RR from this movement. Personally, you can pass your trading account in a day from here. You can even structure your own RR, like 1:3 is the one I always talk about. Imagine if I was like, okay, probably 1:5, and then I only waited for that price to do this, you know, and then obviously if I pull my fib again, look what price did. Optimal trading entry, this would have been trade number two, and I take it only from this size over here. You get what I'm saying? Just understanding how liquidity works, you see? And then took it from this size over here, obviously, understanding that, from above this size, understand that this highs no longer have liquidity. This one over here. This one over here no longer has liquidity. So it needs liquidity to build up, right? So we saw this high go to the downside, but this side we need liquidity above this, almost uh, relative equal highs. So we need liquidity to be built up above these highs, right? That's where our orders would be. And look at the second trade, right? Wicked in. And if you were taking to downside, man, that would have been crazy. That would have been crazy business. That would have been crazy, bro. Look at this. Just today, this is just today, just before New York open. Already you wicked out this liquidity over here because that was the initial target. Even from this, still hit the same TP. Any reaction of buyers that will step into the market, it will be a false reaction. But you would expect those because we're looking to go to the downside because the liquidity upside is already been taken. So you'll be looking to this is the new liquidity pool to the downside. You get what I'm saying? And overall, there is that one on the 15 minute. If you go to the 15 minute, we do have another liquidity pool on the 15 minute, which is at these lows. Imagine if you're pulling it to the downside even further. Now your risk reward becomes even more crazy because that's where price is going. And you would expect some of these liquidities to be taken out, especially the reactions from buyers. Because as you can see, we did have a reaction for buyers and then buyers got induced, taken out to the downside. So that means there is liquidity from about sitting at this level over here. So price does what? You see? Price does what? Takes it out. Takes it out. Double liquidity sweep. And that's exactly what we're looking for. Right? After double liquidity sweep, what do we look for? We look for market size shift. Right? We're looking for market size shift. Market size shift at this area. Market size shift at this area. And then you can pull your Fibonacci, optimal trading entry. Whether you're gonna take it from here or here, where the reverse started to happen. Op Optionally, I would have preferred here. Reason being, this would have also induced buyers because we have a high, right? So These lows were taken out where buyers started to pump in the market, especially after they see this, all of this move, right? Buyers got induced, fake reaction from this level. And if you, like I said, the Fibonacci, next level of liquidity also be here. Stop loss above the highs. Next pool of liquidity, and this lows over here. A good one is the 4R. Are you guys seeing this, man? Are you guys seeing this? Is crazy, bro. This is crazy. I've been saving this for people who don't understand SEC. Honestly, probably you can see this because it is easier to understand. Easier to see liquidity if somebody else is showing you. You know, the buyers are being induced. You can see liquidity being. Same thing that has been happening after these lows. Prices doing one respecting these lows, right? Respecting the buyers being induced. See this also. Buyers were induced. You know fake reaction, right? Buyers being induced, buyers to come into the market. We have the first sweep, second sweep, market style shift, price comes and sweeps this, buyers get induced, they jump into the market, price reacts, we sell off. This is the only liquidity three tip you will need, bro. Now you have order number one, two, bro. It's crazy business. Crazy business. Just from understanding how liquidity works. How this is even on 1 minute to 5, based on 1 5 minute has been doing, and you can clearly see some of these opportunities. The 15 minute also. Remember the 15-minute target? This one. Why? Because we had this sweep, so there's no longer liquidity sitting here. We don't have liquidity sitting here. You want to see price build liquidity, which we did by having inducing buyers to this entry. As you can see, there were buyers who stepped in here. This was an optimal trading entry area. We had also a fair value gap, which got tapped into. A fair value gap which got tapped into. You see? So price ended up going where? To take out this liquidity, second liquidity sweep, reaction, build liquidity through downside. Remember this, and the overall target would have been where? Either this or this, because now we have orders which came to the upside, which are sitting here. Crazy, huh? Right? Remember on the 15, sweep, first sweep, second sweep. Now we have a liquidity block, right? And then what does price do? Market structure shift. Same thing you saw as I was doing it on the 5 minute, it does it on the 15 minute. Now imagine the 1 hour. Now imagine the 4 hour. So would this be something that you'd wanna be involved in? Would you be willing to learn this? That's my question, Chet. Right? Liquidity sweep, first sweep, second sweep. We no longer have liquidity sitting here. So we need price to build up liquidity. Because price came from here to the upside. We've been inducing buyers. Like I said, we've been putting buyers into the market, trapping buyers. This way, trapped, 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 trapped buyers, orders. We have liquidity there. We have liquidity there. So would you be willing to learn this? This video will be saved so you can go and rewatch it. See, market shift, optimal trading entry. You see, first sells, stop loss above the highs. We saw 1:9, 1 to something. Yeah, there you have it. And then if you take it to even here, that's a 1:9 because that's where the next liquidity will be swept. This lows over here. Then probably we might look to go to the upside to take out this liquidity because now as price going to the downside, what does price do? Is building liquidity, sweeps off, you know, sweeps off, you know, sweeps off, So we have liquidity orders sitting at those areas. So as you can see, price is doing what? Is clearing these as price continue to go to the downside. Man, this is game right here, bro. I'm giving you guys game. Game, 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 game. This is game, bro. Understand that orders will be. There's no need for you to would have been in this move. Probably you would have, yeah, because of what price would have done. I mean, we had the first sweep also here, right? Liquidity sweep, second sweep, right? Magastar shift. I mean, why not? As you can see, reaction to the upside, right? You could have had the first orders, but let's say you missed them. You missed this first sweep. Now, this was yesterday, and now all of these are today. Crazy, 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 crazy. I'm just doing all of this to show you guys. For me, I won't need too many things. I just pump in, boom, boom, execute, execute, execute. Beauty, huh? Beauty, 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 guys. You need to understand that once price goes to the upside and liquidity has been grabbed below, price needs to build liquidity below here. Started by here, stop loss already. You can see with this trade, stop loss were just being put below here. Same thing, stop loss here. Same thing, stop loss here. Same thing, stop loss here. Price goes to the upside, takes out the liquidity 2 times, right? Price then makes a shift to downside. There's no longer liquidity above there, right? So what does it do? Starts building liquidity. Other stop loss are below, above there, you know, to the downside, grabs the first one, stops above there. The second one stops above there. So all of this is to induce buyers because now price has been going to the upside, inducing sellers to come into the market because there will some of them they will look for, oh, liquidity sweep, I'm gonna sell, only for price to come take you out. Oh, this level, I'm gonna sell, only for price to come take you out. You get what I'm saying? So same thing it did inducing buyers, it now is inducing sellers. I mean inducing sellers, now it's inducing buyers. We've been having also buyers coming in, also sellers coming in. Now the buyers have been taken out, the sellers have been also now with those move until price breaks below. So what to expect for next week? For next week, I would say price would be definitely be looking to sell below this area, probably like a double sweep, induce buyers and then sell below again, and then from there have that mega shift, and then from there price start to build up. And the next level of liquidity would be exactly at those highs, which is this move to the upside up until here, because now we have liquidity sitting here, we have liquidity sitting here, we have liquidity sitting here. You get what I'm saying? So it's all up to you in terms of what to think, right? But all of these are just some of the things that you can have in your arsenal. I'm not forcing you. I'm not saying you should trade liquidity. You should, I'm not saying you should abandon other concepts. No, no, don't abandon ICC. I mean, if ICC works best for you, please stick to ICC. But if you prefer having another set of, something in your arsenal, yeah, the risk reward is crazy. Same risk, same target from the first one, same target, same simultaneously with this, same target. So you can see we already hit the first target, also already hit the first target, also already hit the first target, right? But if you want to keep it simple for yourself, you can always aim for internal liquidity. That was a good one is to 4R. Let's see this. Do you have double entry share? Oh, yeah. Sorry about that. That was a good one is to, oh man. Yeah, that's a good one is to 9R. This one, that is a good one is to 4R also. If you aim for internal liquidities, right? So probably because of this has been swept, price might come there and probably take out some of this liquidity from these levels over here. Probably this level over here, right? This high over here might be wanna be the one that will be taken out. This one. We don't want to see price kind of weak it and then continue to go through downside. 1:4, 1:9, 1:4. Man, tell me your risk reward. Tell me your winning rate from crazy business. Alright guys, this is the time in my country. This is the time in my country, man. It's past midnight. So I'm just gonna be take a bath and then go to bed. Probably listen to some Meek Mill music and then go to bed. So yeah, guys, rewatch this as many as possible, retest it, play it around, use a different pair, probably on gold, USDT, whatever pair you trade, Bitcoin, whatever, it will always appear, man. It will always appear. Crazy business. I have even this on, oh, I deleted the chart, but I have a wallet to do it also on the volatility indexes. You're welcome, bro. You're welcome. Please rewatch the video, and if it's something that you guys would wanna see more of, I would be dropping them on here, bro. I'll be dropping them on here. And I wanna, yeah, no, I already done it. Already done it. You can rewatch the live after I'm done. Already showed you can use the Fibonacci, or you can look for your fair value gap. The Fibonacci, the optimal trading entry, the OTE Fibonacci. This it's a figure between 0.705 and 0.79. So you can set them there. and switch off the rest. Leave the 5 with the 1 and then add 0.75 and then 0.79. So I want to introduce, I'm not a fan of signals, but I want to introduce signals so you can get into the trade. Probably if I give a signal and it goes my way, especially during New York session time, and it goes my way or it goes our way, and then we can be in a position where no, I'm not combining with ICC. No, it's not combining with ICC. No, it's strictly liquidity. You don't even need the trend here. It's just liquidity. Yes, yes, and targeting liquidity on opposite directions. So yeah, you can use higher time frames and then drop down to smaller time frames for higher risk rewards, or whatsoever, right? So with that being said, I want to introduce signals, um, but I want you to understand how we get into a move because with the mentorship, yes, people are eating, but I think they're very scared when it comes to entries. Some of them they doubt it. So I wanna introduce signals, and then um this is fire. All right, thanks, bro. Thanks. So I wanna introduce signals, and then with signals, it is much easier for people to be in the move with me. Especially trading New York session, right? The New York session might give us, some moves, you know, other times, other times it might not, But if I see a move during New York, but if it comes like New York Open, right? If you see a move by New York Open, we can take it together. And if not, um, and it comes during New York session, but later on around the evening, we can probably have like you know um pending orders, or I'll just send a signal if you guys sell this. Here's the entry, here's the stop loss, here's the target. You get what I'm saying? And then I send the chart explaining why I'm looking to probably can give you guys an idea, in terms of what to look for. And then if you want to learn the concepts, you can just join the House University mentorship, right? So yeah, pretty much. You guys let me know what you guys think of that. What you guys think of that? And trading like liquidity like this, the risk reward is much higher. Man. I won't lie to you. The risk reward is much higher, especially when you have long targets. From a higher time frame, probably like 1 hour. The risk reward is much crazy. But we can target the internal ones like these, over here. We might take the internal ones like this, but obviously keeping the vision of the whole. Or you can take partials, because price can reverse and all these kind of things. You see reversal, but continuation, reversal, continuation. I prefer what works at the moment, you know. I really prefer what works in the moment. I do have ICC analysis. I want you to see this. I know price is going down on liquidity, but I also know price is going down on ICC. I saw them this entry today during our New York session when we did our New York session. I did explain it. I shared it with them. Oh man, I put this link on the wrong group, on the wrong server. I should have put it in general. This was the session. Um, Let's see. Yeah, let's see. This was the breakdown on the live session on New York. You see, I did make that explanation what to expect. You know, even with the USD, so yeah, I did give them the ICC. As you can see, this was the ICC entry. You see, this was the ICC entry. But I would have preferred stars being here or above these. Still not a problem. Target would have been a 1:1, but obviously, price going there. It's gonna go there. Same thing with the liquidity. It's still the same target, bro. Still the same target, bro. Price is gonna come here. Easy. It's just having different things in your arsenal, bro. Different strategies in your arsenal. Honestly, like for instance, let's see, Euro USD. Let's check Euro USD. Oh, he's about to die now. Oh man, please don't die. Please don't die. Please don't die yet. Oh, saved. You see, with this one, we have what we call a liquidity purge. Still waiting for some of it to this side to be taken out. It's not to be taken out, but I can delete this, show you something Asian range, just to show you how many things I know. Alright, let's switch off sessions and let this. Um, alright, so this is liquidity. I mean, not liquidity, man. This is London's. This is Asian range, trading Asian range. One of the easiest also. One of the easiest to trade. 5 minutes. You need a break of the Asian range, either to the downside or the upside, right? So I'm just gonna use the 1 minute just to give you more context. All right. So as you can see, we haven't priced on the 5 minute, make a lower low, lower high, lower low over here, right? On the 5 minute, we have the sweep of the liquidity of the Asian low. Price goes up. We want to see price break above this 5 minute high, which was this one. We see price give us a market structure shift, right? And then price starts to reverse from there. You can have the equilibrium, 50% of the move being tapped into and then aim for a 1:2. You get what I'm saying? 1:2, stop loss below the highs. 1:2, almost 1:2, but yeah, pretty much. This is for 1:2. So you've seen this. I've done this with you guys, you know this move, right? If you would have went to the 1 minute, probably your 1:2 would have hit. Um, your Magasa shift would have came from this level. Still the same thing, obviously, in terms of the move. But yeah, pretty much. So it's just about having different things in your arsenal. Nothing much, bro. Understand what works at what time. This, for me, works exactly at in the morning. This is for in the morning setup. See, 8 o'clock in the morning, between 8 and 12 in the morning. So I have that, and I also have the liquidity. I also have the ICC. Understand what works at what time. You see? I spoke about this also. From today, around, I spoke about it. You see, ICC, indication, correction, continuation. In fact, there's an indication and then a correction and then a continuation. But yeah, pretty much. Yeah, indication, correction, continuation. You see, a good R. So pretty much, man, it's all up to you what you prefer, bro. But having a different things on your ass doesn't necessarily make you go all over the place. You can choose what works at what time. If you don't see anything liquidity wise and you see anything ICC wise, you can jump on it. I'm not saying trade every day. Yes, no, I'm not saying that. But it's good to have some things in your arsenal. It's very good. So yeah, bro. So guys, that this brings us to the end of today's session, man. I'm very tired. I'm very tired, guys. So yeah, have a great day, great evening. Enjoy the weekend and be safe with family. All right. Bye. Oh, by the way, you can watch this. You can watch this. It's gonna be saved in the live. You can go to access the previous ones. You can go to the Hasu University and you can come to live. You'll find the previous ones there. You can access them. Some of them I spoke about ICC, some of them Asian range, yeah, pretty much. This one was also basically ICC, this one over here. ICC, basically ICC. So you can watch them, guys. You can watch them. And don't forget to subscribe, man. Some of you are subscribing and unsubscribing at the same time. I don't know what I did to you, but yeah, it's fine. All right. Bye, guys. YouTube, bro. YouTube, bro. Bye.